everyone, this is Simon with AvaTrade. Welcome back to our weekly webinar, your weekly trading plan. And of course, I want to welcome everyone, especially the new people. And for those of you that this is your first time, you can just guess what we're going to be doing. It's creating a weekly trading plan, as simple as it is. And as I always say, it's not my quote. Somebody else has said a while ago, as the traders like to say, you plan your trade and then you trade your plan. And there's no guarantee, of course, by planning it, there's no guarantee that we'll make money, but it definitely creates more order. It just removes spontaneous and not organized trading and decisions based on emotion. So we're better off as traders really planning our trading week based on technicals, fundamentals, and other aspects that might be involved. So a few things about myself. This is me, Simon Friedman, Senior Account Manager with AvaTrade. My overall experience, I think this June will be 23 years since I started trading back in New York City as a professional proprietary day trader. I did it for about 11 years, and then after that, I went into mentoring and educating other traders. And of course, I continue trading, never stopped, as this is my passion. And I love to work with customers with AvaTrade, trying to help them become better day by day. The agenda of the webinar is usually the same. We speak about indices, stocks, commodities, and Forex. Today we'll be talking about the big picture. We'll be talking about general idea what happened to markets last week, especially on Friday. We'll go through specific assets. Most of the indices we'll try to look into. We'll talk about few stocks that includes Tesla, Amazon, and others. We'll definitely talk about Forex world and the dollar index. And at the end, just take a quick look at cryptos. And these are the channels that would be nice for you to be in touch with us. You have Telegram, you have Twitter, and my favorite YouTube channel, which is full of amazing, useful information, including tutorials and all kind of educational materials. And of course, the webinars, I think including this one, are being recorded and then posted on YouTube channel. So just in case if you missed it or the times are not really fitting you, you can find most of the webinars are being posted on our YouTube channel. And definitely subscribing to that channel would be great if you'd like, and clicking on that bell that you'll be notified when new things are being added, and we have daily updates to our YouTube channel. And of course, risk warning, you can find the full statement at avatrade.com. Everything we do here is purely educational. We're not suggesting any trades. Now, big picture, and I would like to start with this slide, and I took it from marketwatch.com, and it says right here in a bold font, Dow surges 700 points Friday, S&P snaps 4-week losing streak after employment report shows wage gains cooled in December. Interesting. I was actually looking at those numbers the moment they came out, and I didn't really pay attention to the wages. And my first attention was, of course, to see how many jobs were added and what is the employment rate. So there were more jobs added than expected. They expected, I think, 200,000. The 223,000 were added, like 10% more. And unemployment rate was expected to be 3.7 and came from 3.5. So my first thought was, okay, the market's going to fall because the better data, including the employment data, gives more space to Feds to continue with their interest rate raising. And I didn't really pay attention, but according to this, the market really reacted to that number being lower than expected. I think we're talking about the average hourly earnings. They were expected 5%, and it came to 4.6. last month reading was 4.8. So I guess the market took it as a positive thing. So that's a big thing. 700 points on Dow. We'll be looking at charts at the moment, but that's pretty big. And another slide that I took, and also it's really upsetting, of course. It says FTX pulled a crypto fraud that makes scammer Bernie Madoff looks like amateur. That's pretty rough. And by the way, the SBF stands for Sam Bankman-Fried. I don't know how do you spell the name. And it said there the 30-year-old nobody makes Bernie Madoff, the disgraced money manager who, I'm just quoting that article, a piece of it, who perpetrated the biggest Ponzi scheme ever, looks like amateur. What took Madoff decades, SBF accomplished in just a handful of years. And it says right here, this is, I think, the key point that kind of interesting. Crypto markets collapse exposes a giant unregulated casino hijacked by greed. And I mean, you can look into these articles. Again, it's marketwatch.com. It's pretty interesting. It's written by this guy, Vitaly Katzenselson. It shows how, I'm not going to go into it, but you can read it and take a look for yourself what it means to you. Economic calendar. This week I took not just high impact, but also mid impact, because most of it is mid impact. So a lot of events, specifically, we have the CPI data. So let's just go through it really quick. Sunday, building permits from Australia. We have unemployment rates from Switzerland, unemployment from, what is this, Italy, I believe. European Union unemployment rate. We have CPI data from Japan. Very interesting. Yen has been really attracting a lot of attention lately. We have retail sales from UK. Tuesday, we have, I'm not sure what this direct investment is, just skip it. We have Bank of Canada governors speaking, and that's on Tuesday. Consumer confidence from New Zealand, monthly consumer price index from Australia, retail sales from Australia. Any data from China is coming in is important. We'll talk about China in a moment. We have CPI numbers, inflation numbers from China also on Tuesday. Wednesday, we have building permits from New Zealand, bond action. This is important. Trade balances from Australia. Australian dollar has been very, very strong. We'll take a look at the moment. So we'll be watching these numbers. Thursday, we have CPI numbers that I mentioned to you earlier from US. This is the key data right here. We have initial jobless claims. We have Friday also a bunch of data important. We have GDP numbers from UK. UK economy has been a little bit struggling with strikes and everything else. Industrial production, manufacturing production, all this coming from UK on Friday. Industrial production from European Union. GDP estimates from UK again. We have also very important, this is marked in red, as you can see, high impact. Michigan Consumer Sentiment Index, another one very, very important. Inflation expectations also. And we have trade balance from China. As I said, we have data from China. We'll really be watching because it's very controversial since they opened or changed or eased their COVID policy. The economy, they did it just to start reviving economy, as a lot of companies were shut down or partially shut down, and that caused a lot of COVID cases. And there's a lot of issues there. We're not really aware of the full extent of it, but it doesn't look good as far as COVID. And we mentioned, I think last week, that US and Italy as well, they put a ban on Chinese people coming, or people from China flying to US and Italy. They have to do the test, the COVID test, in order to be able to enter those countries. Let's move on to the trading terminal, and then we'll start analyzing things. So first of all, big word, recession. And I did some research and I found a few things. There's a strategist at JP Morgan whose name is very hard to pronounce. His name is Nikolaos, and the last name I will try to pronounce, Panigirtsoglu. He actually finds that the recession that began in 1969 is very consistent with the patterns of the market of the past year. So he compares it and said that we might be facing a similar kind of recession. And he says that decline could go up to 6 months after the start of the recession, but a quick recovery after that. That's according to this strategist at JP Morgan. Now, Deutsche Bank, they say that the recession they're expecting in the second half of this year. And so it's a big word. And before going through all the instruments, I just went through all of them. We'll take a look at the moment. But first, I want to bring the crude oil, even though I didn't plan on doing it. But it's just thoughts are that crude oil actually is the only instrument kind of reflects that fear of recession. So we know in recession, certain things are being affected more than others, and it looks like oil is reacting to that. It's really, even on Friday when the whole market ran up, oil didn't do much. It closed almost flat, a little bit lower than the opening. Okay, so let's stick to the indices first, and let's just see the famous one that we read in the article, 700 points. Here's Dow Jones. Out of all three indices, the U.S. indices, Dow Jones is the only one that actually broke through this resistance of this accumulation range. There was a lot of accumulation going here, and if you try to draw that channel here, we've been sitting within it for a while. This is the daily chart. So since we moved into this channel back on the 15th of December, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 2 weeks, more than 2 weeks, we were sitting in that channel, and finally we broke through. So what to expect? We might easily move higher. We are at 50 moving average right here. And out of three of them, Dow Jones the only one actually breaking to the upside. So scenario A, we can move higher and retest this 34,200 plus level from which we sold out here. As you could see, we tried to fight that level here. We couldn't manage to sustain that gain, and we went lower. So that's Dow Jones. S&P actually didn't manage to do the same kind of operation. Let's call it that name. Okay, we've been accumulating for the similar amount of time, and we couldn't break. We did break. We had the spike above it. We hit 200 or almost hit 200 moving average on the daily chart, but we still closed below that resistance, which is very significant. That means that this move could be reversed, or we might actually continue, but it shows weaker than the Dow Jones. And NASDAQ as the weakest out of three, similar idea. It didn't really touch that high level of this range. And nice bar though. We had a nice move on Friday, but we didn't manage to break through it. Now, European indices, very, very strong. Dow, we broke out of this resistance finally. More than that, FTSE, historical moment. I'm going to bring the weekly chart. If you remember, I mentioned to you, we couldn't really break through this resistance that we kind of established back in beginning of 2020. We dropped with the pandemic. We came back straight to it. 1, 2, 3, 4 attempts. This is weekly chart. And finally, we broke through it. So this is very significant. This could be the beginning of the move. This could be on the other side, a short-lived excitement that we're going to come right back to this area below this. What's the number there? 76.29.5. So again, of course, a lot of stops got triggered that actually accelerated this move to the upside. But all European indices, if you take a look, the French index, very strong move to the upside. DAX, we already spoke about, and UK index, all of them moved higher. China, very controversial economically. That's why this week's data will be very, very, very important to see how and what comes out as far as the inflation and the trade balance is very, very important. So 3 consecutive days up, we broke above this resistance here that was established back in October, from which we sold out. And we closed the first closure since October above that area. So let's see if we see continuation. HSI, the Hong Kong index, also very strong, moves to the upside. We might be facing resistance at some point. We're getting close to it. And Nifty 50, I want to bring to your attention. Nifty 50, if you remember, we broke through it. We failed to go higher. And as if the market comes in, Nifty might come in below this line here around 18,500, and we did. And this is the weekly chart, shows nicely. We came right back, and this is the 3rd week, 4th week we're closing below that. We tried to go higher and retest it, we couldn't. So let's see what the general market is doing. Nifty could go into a correction mode to the downside. It's up to a lot of aspects, including the global economy and the fear of recession and everything else. Nifty tend to be very sensitive to, of course, what's happening in the US economically. So we'll be watching that index closely. Okay, so that's as far as indices. Again, let's see how this fear of coming recession is spreading through the markets. A lot of retailers are warning. A lot of technical stocks are warning. We start with Amazon. Amazon just announced last week they letting go 18,000 workers, 18,000 employees being fired. Now the stock reacted, of course, the market was up and everything else, but Amazon, it could be the beginning of kind of coming back to life. It's not many stocks actually dropped to the level of the low of pandemic. This is March 15, the low when the market dropped. That's where Amazon dropped, and with all the excitement that people sitting home ordering online, Amazon really had a nice run to the upside. And we came in the past few weeks, we came to retest that level. And this is the first week that we actually bounced to the upside. Let's see if this move holds. Also, when the company announces huge layoffs, sometimes the shareholders reacting in a positive way, and the stock or the share price goes higher. So let's see if that is happening in this case. Tesla, very interesting. Friday was a very interesting day. Tesla announced that they're lowering the price of their vehicles in China and Asia area, and the stock dropped. I think it gapped down. It opened at let's see, at 102.64, and then it continued. Let's see, daily chart, so I'm not confusing myself. Oh, let's see, hourly chart. It was a gap. Okay, the previous day we closed at 110.79. We opened at 102.64, and then recovery came. Now, a lot of articles were that the stock is oversold, that these levels are attractive, and so on. So initial reaction was down. I guess it was at that moment they figured it's overreacted to the downside. Then the market moved up on the data, on the employment data, and Tesla went higher. And now Tesla is very interesting now. So you can see this is hourly chart, right? We are at the level around 113 that if we break through it, we might continue that move to the upside. And if we do, that the next level of resistance could be around 124, 125, and we could be actually getting out of woods. It's a solid company. They have solid results. As you know, as we discussed a few times, the biggest issue for Tesla started with all Twitter story and saga. So maybe the investors are coming back. Maybe funds would be investing at this point, and the stock could be on the way to recovery. So that's as far as Tesla. Another one is Boeing. If you remember, I mentioned to you the strength of the stock. We broke through this week. We just opened with the gap and continued. And we might continue even higher, maybe to 224, 225 area, or maybe all the way to the 200 moving average. Boeing is very, very strong. Nike stock, similar idea. If you remember, we spoke about that earnings. When the earnings came, the stock gapped from 102, 103 to 118. Then it had consolidation and continuation to the upside. So it also has potential to move higher, or it might pull back in and retest this 118 area to establish the support. We'll be watching that. Now, another one that we didn't mention for a few weeks, very interesting. We have Teva. If you remember, we spoke about it a while back when the stock moved higher, then it sold out, came to 760 area. And then we spoke that around between 8 and 9, there was a lot of action, and potentially the stock could move down with the limited risk, and actually moved very nicely in the past few weeks. Just something to watch. Few stocks are reporting this week. The major ones are reporting on Friday, and they'll report before the market, and those are banking stocks. We have JP Morgan reporting. The stock's been very strong. I think JP Morgan has been the strongest out of banks. He had a correction, but it's really holding very nicely, as opposed to even Goldman Sachs, the king of them. He actually sold out. This weekly chart, but on daily chart after the sell-off, it didn't really do much. It's really choppy trading. So Goldman is not reporting, but JP Morgan is reporting. Citigroup is reporting. Bank of America is reporting. So this week will be a big week for banking stocks. So we'll be watching them as well. Now, Intel as an indication of semiconductors has been very, very strong in the past week. Let's take a look at the weekly chart. Yes, after establishing this double support here around $25, we moved nicely this past week, and this could actually continue, and that would mean a nice recovery and a kind of a signal for the sector or semiconductor sector to coming back to life. Again, let's see, maybe recession will take over and we'll continue selling, but Intel had the nice move. Let's see if they actually could hold that momentum to the upside. That's it pretty much with the stocks, and let's move to commodities, and we'll start with oil. As I said, oil totally disregards the move on Friday for the equity markets and the weakness of the dollar. It's actually didn't do much. It actually closed a little bit lower than the opening price. So what's next on crude? Very interesting here. We're really holding this support area here. Let's see, this initial sell. We went to $70, 70.09. Okay, so if we do break this recent, this is the weekly chart. If we do break this recent support, we can actually move to, if we break 70, when the next stop is 65, 64. And this level that I marked at 64.24 is the level here. And if you move it out to monthly chart, you can see actually how nice this level works. We had few attempts to break to the upside here, then we sold out. That was back in a pandemic. Then we came back, we had the big fight over this level. Then we established support with these huge tails around this 64, 65 area, and then moved higher. So if we do break 70 again, we might come back to this 64, 65 level on oil. Natural gas, very crucial situation here. Take a look at the monthly chart where the big loss in December and January started really, really bad for natural gas. And we are sitting in these levels from which we shoot to the upside. So let's zoom in. The weekly chart, take a look. These two bars here, there was a year, what is it? The week of 19th of December 2021. The low here was 351, and here 353. This past week, we had 352, right in exact area from which we really sustained that sell-off, and then we had accumulation and shoot to the upside. And we did have a reaction on Friday. Maybe it's a positivity of the market, maybe the natural gas itself attracted buyers, but take a look. Let's bring the 1 hour chart. It was a straight down sell-off, and then we made the fresh low that we touched at more than a year ago low. We hit this low of 3.526, and then we bounce. Now we're fighting over this level, 370, 380. So this could be the beginning of that recovery for natural gas. Everything is possible. Could be the opposite. We can continue lower. That's why I'm saying it's a very, very crucial stage or level for natural gas. And we stopped, or we closed right on 200 moving average on the weekly chart, which is also hopefully for the buyers a kind of a reassuring thing that we might bounce from here on natural gas. So this week is going to be very crucial. Just take a look, 4 straight weeks to the downside, no bounces here. And the daily chart also had a straight line to the downside with few green days in between. So this could be it after the spike to the downside and recovery and closing above the previous day's low. It could be, or it could be just wishful thinking. This week will show what it is. Gold. Gold broke through this resistance that we experienced around 1800, where the 2 consecutive days as weeks to the upside. Now, what's next for gold? If we do continue higher, this level around here, around 1870, 1880, we might face resistance like we did here, like we did here, like we did here. So also serious week for the gold. Let's see what happens there. Of course, it will be depending what the market is doing and on that what dollar index is doing. We'll go to dollar index in the moment. Platinum, another metal, also very strong on the weekly chart. On the daily chart, it's really holding nicely to the recent gains. And if we do continue higher, at some point we'll be facing resistance, maybe around these levels, 1150, 1140. So far, it's been strong. After this accumulation here, we broke easily through the previous resistance. This is the weekly chart. And another one is copper. Copper also is on the way to retest this resistance, which is very, very important. If you remember, every time I speak of China, I bring out oil and copper. So oil didn't react to it, and that's why I'm thinking it's being affected by fears of recession. But copper did react to the upside, and we are on the way to retest these series levels of resistance that kind of proved to be support here and then became resistance recently, and that's around 393, 394 area. And let's see how this week plays out and what are the news and announcements from China and how copper will react to it. And I'm not going to go to the soft commodities. They really didn't do much this week, but I want to bring out sugar. Sugar had a nice sell-off on the daily chart. You can see is a really, really vertical fall, just a strong fall here. So take a look. This is daily chart. We do come to the level of possible support. Technically, as far as level, it's around $18.92, $19, and also it's being supported by the moving averages. 200 and 100 are around that level. So let's see. Fundamentally, I'm not sure what's this. When you trade commodities, there's a lot of aspects, including weather and seasonality and everything else. So we'll be watching sugar actually on possible reversal or continuation, because if you take a look at the weekly chart, a lot of accumulation happened in this channel. Then we broke through it, then we came right back, and we had a hard time breaking through it. And then take a look, 3 weeks action. 1 week we had a crazy move to the upside. Following week, erased that move and then went much lower. So we're sitting on the weekly chart, we're sitting on the 50 moving average at the bottom of this channel. So if we start breaking that, we might actually go and retest the next level of support, which could be around here. This is where the initial move stopped, and a lot of fights happen around this level. So if we do break this 1880, 1890 to the downside, we might come to around $18 and retest that. But a lot of actions here, a lot of accumulation happened, and a lot of dreams kind of didn't come true, because after this accumulation, when the traders saw this move, they probably thought this is it, and this was a big disappointment and coming back into this channel. Like I said, anything could happen. We can hold this level and continue higher, or we can just break through it, and all this accumulation can turn into selling. Here, if you go to the monthly chart, you can see even clear the move to the upside, and then we have a very, very long time accumulation here of consolidation. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 months, a year and a half of pretty much being in the channel. So something's going to happen. It's either we're going to shoot back up and continue higher, or we're going to move below this $18 and maybe more lower. So sugar is very, very interesting. Let's go into currencies. We'll start with dollar index. Where's dollar index? Now, dollar index, very, very important. We are below this level that we established around 103.80. If you remember, I mentioned 103.80 and 104.50. There's a very tight channel here. We did close below it. And I watched the 10-year yields. They're still about 350. So if you know what I'm talking about, the yields for the 10-year US bonds, if they keep staying about 350, that's a good sign. If they go below, the dollar index could continue lower here. And if you take a look at the weekly chart, you saw kind of a V reversal here. It's very strong. So we might continue. If we do continue lower, as you could see, we had closing below it the week before, and this week we had attempt to go higher, but then we came right back in. We might slide lower to around 101, 101.5 area, or we might bounce back about 103.80 and establish support and continue higher. We'll see what happens this week. So based on that, most of the major currencies had a nice move this past week. Euro had a huge range actually this week. It sold and then it recovered. I think Friday was the recovery, a strong recovery in euro. Take a look at this range: 104.81, 106.40. It's about 170 pips move. Australian dollar is very strong. Actually, Australian dollar is trying to break out of this resistance here. Take a look. We had the resistance around here from which we sold out, around 0.69. And now we're on the way to retest it. So Australian dollar, again, we'll see what dollar index is doing and what, especially Australian dollar, like if you remember, I mentioned a few minutes ago that we have trade imbalances. And Australian and New Zealand dollar, they consider to be commodity currencies. So all the products that they sell abroad really affects, of course, the local currency. New Zealand dollar as well is trying to break this recent resistance. Had a very nice recovery. Take a look. USD CAD. Even though oil has been weak, Canadian dollar has been strong for some reason. And if you take a look at the weekly chart, we kind of making, in a daily chart, you see it on the weekly chart, it's clear. We just made a lower high, if you compare it with this one here, and now we're on the way down. So we could be, again, like I said, we'll see what dollar index is doing. We might be coming lower to retest this level here around 133.80. That's the level from which we sold back in October 2020 and then recovered slowly. And if we do hold this level, of course, we can reverse and continue higher. If we break through it, we might go and try to find the support. Could be the leverage, the averages here. And interestingly enough here, you see the 50 moving average, this is the weekly chart, is trying to break above the 200. So that's kind of bullish. It did here. It broke above the 100 moving average. We had a nice move, and here as well. So USD CAD also be watching, and USD CHF is really fighting this level. They try to break it lower, and they're not succeeding. So this 0.92 area, it's a strong support, and as long as it's holding, there's a chance of a nice reversal when they stop trying or they give up on trying to break in lower. We might see reversals and the buyers coming in. And of course, if we do break below, we might continue. But this area is highly congested, as you could see. A lot of actions, a lot of accumulations happen here, and then we shoot up, and then we came back recently to the same level around 0.92. So that's as far as Forex. And yen, the last one I want to bring up to you. Yen is showing the weakness, and take a look on Friday when the dollar got weaker. Of course, it got weaker against the yen, but yen has been showing lately weakness. The dollar, the 3 days in a row, dollar had the strength against the yen, and that makes me want to bring the Japanese index into the picture, Nikkei. Nikkei, first time in a long time, it shows a little bit of a recovery here. Of course, it went up in sympathy to all the global markets that had the move, and it's very significant here. As you could see, this trend line that we broke through it, and then we're on the way to retest it to the upside. So two aspects with Nikkei. One is the global markets. They had a nice recovery. And two, yen is showing a little bit of weakness. And this is a major reason why the index fell strongly when the yen regained the value. So let's see how this plays out. If we do break above this channel line or the trend line, we might continue high if we start establishing support. And if we reject that line and we start building a resistance around it, we might continue lower and move to the downside. So that's as far as yen. We'll be watching the yen. Again, just to remind you, one of the officials, I think 2 weeks ago, mentioned that he expects the yen to continue gaining strength. Let's see what happens in the upcoming week. And of course, with the title on NFTs that we saw, that slide, just let's take a look at the instrument that is not exciting anymore for anybody. Take a look, weekly chart, that nothing's happening. Take a look for how many weeks after this drop. I think this was when the NFT story came out. I could be mistaken. But after that, it's pretty much nothing happening. We held support around 18.5. We just broke through it and nothing. It's a very tight range. 4-3, a couple $100 range. That this is a daily chart. So this was the low back in December 16th. That's 16,500. That was a low, and since then the high was 17. So we're talking about $500 range. That's unknown for cryptos. And again, that the whole story, it's very disappointing. And I think, as I mentioned to you in the past, that this situation and the process that the company is going through, and all publicity and everything else, is going to attract a lot of regulators and a lot of actions to regulate the cryptocurrencies to avoid this issue of people just losing their money overnight. So that's as far as the cryptos. And that's it pretty much. Let's just summarize things. We had NFP numbers, and part of the data that the hourly wages kind of attracted the markets in a positive way. We had a nice run. And this week, let's see if that continues, or the fears of recession and continuation of Feds increasing the rates will prevail. We'll find out. Dollar at the key levels here that we might bounce to the upside or continue lower. Tesla, attractive by the buyers possible. Amazon as well by hitting the lows. And we have banks reporting the end of the week. I want to wish everyone a very successful week. Stay happy, stay healthy, and we'll be back the following week. All the best. Take care.